Right now, let's switch it up a little bit and we'll take a look at the QQQQ, which is the ETF for the NASDAQ 100. And what I want to show you, this is a daily chart. Another big hammer here on increasing volume. This is a candlestick, again, like I said earlier, that is a potential reversal. If we look at a 60-minute chart, we see something even more impressive. This big, strong candle, almost an engulfing on huge green buying volume. This is today, so this is the hourly chart. So very, very powerful. Of course, we still closed down for the day. Here's yesterday's close, but a real nice change in character in the last hour in this market. I want to show you 3C on the Qs, all 5-minute. Huge divergence. This is today, 10-6 over here. Huge divergence in this version of 3C. Another 5-minute. This orange, you can see another nice divergence, and the faster formulation. Huge divergence, leading very positive. So all the evidence to me is pointing towards a reversal. Let's take a look at XLF, which is the ETF for financials, and in 3C you can see a nice divergence there. But we're going to look at a daily chart, and we're going to zoom in a little bit on that one. This one we don't get a hammer, but we get something called a star, which is similar to a hammer. Here's a hammer over here that provides, and typically the bottom of a hammer provides support. The market found support near the bottom of this hammer, so that's working out good. And it formed a star, which is actually called a morning star, and this is another reversal series of candles. So if we get a positive day up tomorrow, that will consummate this formation and we'll have a very likely reversal. I want to show you 3C, a one-day chart here of XLF, and XLF is the epicenter because it's financials of everything that's going on in this market. September 18th, remember that hammer I pointed out that's providing support? Look at the nice positive divergence. It really has turned into a leading divergence over here. So XLF, I really think that this is just being bought up as we continue to see these lows being made. It's hard to believe when you see the market sell off like it is, but I do believe there are buyers that are stepping in there. I want to show you one more thing why I have XLF up in 3C. I want to show you an hourly version of this chart. A lot of people ask me how 3C works, and I want to show you since about the September 18th area. What we look for, like again, is confirmation. Over here we see the market make new highs. We see 3C not confirm that, and that actually turns out to be a distribution day, and we see a sell-off. So 3C did what it was supposed to. Over here, nice positive relative divergence as 3C is making a higher low and price is making a lower low. So we see a move to the upside. Let me clear all this off. When we see this move to the upside, if this was a real strong move that was under accumulation, like I said just a few minutes ago, what's been happening is traders have been selling the rallies. And in this case, 3C should have followed price up. It did not follow price up. Price is up here, it stayed down here, so we saw that sell-off. This is how 3C works. In the longer run, though, we're seeing pretty much equal lows, but you can see again 3C is moving to higher lows, which signals accumulation. So that's basically how it works. If you see like this level here, we have two almost equal highs, but look at the difference in 3C. It's moving down. What does the market do? Market moves down. This is how this indicator works. It takes a little bit of time to get used to spotting divergences, but once you get the hang of it, it's pretty simple. But I'll give you a word of caution. If you are looking for little divergences here and there, if you have to look for it, just roll past it, forget it. It should stick out like a sore thumb, like this one does, and like this one does. If it doesn't stick out like a sore thumb, don't mess with it. Real quick, I just want to give you the price-volume relationships today. For all New York Stock Exchange stocks, close down, volume up. So we got lower prices with higher volume, 4,614 stocks versus closed down with volume down, 1,404 stocks. Closed down with volume up is a capitulation signal. This is a good thing to have more of the first number than the second. So I'm going to continue going through these. The Russell 3K, 816 versus 693. Russell 2K, 1170 versus 428. The NASDAQ 100, 90% of the stocks in it were down today. 72 in the first category, 18 in the second. In the Dow 30, all 30 closed down today. 26 closed down with volume up. 4 closed down with volume down. In the S&P 500, 460 stocks closed down. 334 in the first category, 126 in the second. So we're at just about a 3-to-1 ratio, which means basically that this market is hugely oversold, really ready for a bounce. In market internals, if we look at declining issues versus advancing issues, we have in the New York Stock Exchange 3,031 stocks declined, 250 advanced. In the NASDAQ, we have 2,582 that declined, 472 that advanced. New lows versus new highs. New York Stock Exchange, 1,663 new lows, 2 new highs. In the NASDAQ, 1,141 new lows, 8 new highs. This is hugely lopsided, oversold market internals. I haven't seen market internals like this ever since I've been trading. So we have a hugely oversold market. I think really that we're looking at a reversal. In after hours, my last check, the S&P 500 was down 10 points about to 1050. The NASDAQ I think was down about 5 points versus fair value at 1406. So what happened in after hours to knock the market down is Bank of America came out. Here's Bank of America, and you can see we have a wide bid-ask spread, but this was trading much lower down here. I think they lost about 10%. Bank of America came out with earnings after hours. Their earnings per share came in at 15 cents versus a consensus of 66 cents, so they did horrible. Their revenues came in at 19.9 billion versus a consensus of 20.67 billion, and really bad numbers. They're also selling $10 billion in common stock to raise capital, and their non-performing assets this quarter were at 1.4%, last quarter at 1.1%, last year at 0.43%. So you can see their non-performing assets are just almost, well, about 30% higher since last month, or since last quarter, so not looking good there. Also, they cut their dividend in half to 32 cents from 64. Tuesday, tomorrow, we have the FOMC minutes that are going to be released from their last meeting at 2 p.m. Market's going to be looking at that to get an idea of what the Fed is thinking. There's no major market moving earnings announcements. And that will do it for tonight. So, I'm Brant from TradeGuild.net. Slide on by there if you want to get on the contributors letter. I've got a post up below these videos. You can check that out. You can see how you can do that. And if you want to get into 3C, I told you how to do that earlier. So head on over to Trade Guild. Thanks a lot for listening.